Okay, and we are live. Good morning, good afternoon, good evening, good day. Just depends on where you are and when you are listening to this broadcast. My name is Clara Lyons-DeVaughn. I am the broker owner of Lyonsview Realty. We provide residential, commercial for small businesses and nonprofits, and property management services. And we stream live here on Financial Fridays at 9:30 a.m. Eastern Standard Time every Friday on Facebook and also on YouTube. And you can catch the replay on YouTube at any time. Um, Financial Fridays, we are committed to ensuring you have the resources, the information, and the tips to ensure you're making the best financial decisions. And we want to maximize your intellectual and your financial wealth building power now and in the future. Here at Financial Fridays, we just want to make you stay current on those trends that impact your bottom line. So I'm really excited today. This is not a new guest. She is a returning guest, and I'm so excited to have her back, Miss Nicole Archibald. Hi, Nicole.
Hello, good morning. How are you?
I am phenomenal. I am phenomenal. Nicole is one of the best loan officers. She has excellent customer service. I learn from her every day on how to really treat clients right. And in addition to being a phenomenal loan officer, she's a wonderful person and human being, which is very important to me as well.
Oh, thank you.
So, Nicole, tell our audience a little bit about you, something that you'd like to share.
Yeah, so I am Nicole Archibald, as I got this lovely intro. I'm a loan officer with Wells Fargo, and I help people buy houses. I work in the low to moderate income space as well as any other space, of course, but our focus is on low to moderate income buyers. So we help with a lot of down payment assistance programs. I've been with Wells Fargo now. I've been in lending since 2017. You believe that? It's been off and
Wow.
on since 2017. Yeah. So it's been quite some time. What a ride.
Yeah. What inspired you to get into lending?
It's actually a pretty funny story. I had no interest in like real estate at all. And it was actually when my father passed away, I met my older sister that I had lost touch with, and she was a loan officer. So me and my other sister, because there's three sisters, well, there's five kids total, but there's three sisters, and all of us ended up in lending because she was a loan officer and kind of got us under her wing, and we started learning everything and became pretty interesting and really fun. And I decided to kind of go head first, and then that's how I met you. Actually, going
Yeah.
like my first meeting at NARAB. So it's been quite a whirlwind, but I started because my older sister was in lending, and I never was raised to purchase a home, which is really strange. I know a lot of people think, oh, just work and get a house. My mom did that, and she was like, no, do not buy a house. It's so much work. You don't want to do this. After she moved out of my childhood home, she always felt that renting was easier for her. So
Mhm.
it wasn't until I was older I got into real estate, and I like it. So.
Yeah, real estate. I don't know what the fear is for people around real estate. I actually I do. I do know what some of the fears are. Some of it is financing, which we're going to talk
Hmm.
about today to kind of alleviate some of that fear. How do you get the money? How do you save for the money? What do you do? What's the process? Some of
Hmm.
it is like your mama saying, they think it's easier. Some people think it's easier that to rent, to have someone
Yeah.
else worry about when things break or go wrong. But sometimes it's cheaper, a lot cheaper, especially in this market with things becoming so much more expensive. Um, we have a mutual client who they bought their house, and it was at that time very inexpensive for the house that they bought, and they were able to pay it off. And now they're buying another house, so now they have all of that equity to put into the new house. But if they
Hmm.
hadn't made that initial purchase, they wouldn't have that leverage of additional ec- equity, which is the difference between what your house is worth now and what you paid for it, to be able to kind of step up in the home purchasing process. So it's
Yeah.
really a great investment, and sometimes people don't realize what a great investment real estate is. And it's the way that almost, you know, 70-80% of Americans build wealth in the United States, other than the stock market. That's the other way that
Yeah.
people acquire wealth over time, short and long term periods of time. So yeah, it's one of the reasons for this show was to really dispel the myth that you cannot afford to purchase a house, because there are still a lot of resources available, which is why I'm really excited for you to be here today. And if you could just talk a little bit about the loan process for somebody who maybe has never gotten a loan before, kind of some of the things that they might need, um, or how that process works, so they kind of get an overview of what that is.
Yeah, for sure. So generally, when you're looking to purchase a home, I work a lot with first-time home buyers, and it's just mainly gathering the information. The first thing I would say is speak to a professional who can tell you what to look for, and just what to be prepared for in general. Because sometimes people have in their mindset what they want to do, and sometimes you just can't do it, right? Like you just need to have a realistic timeline. I think that would be the first thing, and something that's actually realistic, something that's not, I'm too afraid, so I'm going to look in 2 to 3 years. Realistically, some people can buy within 6 months, depending on their financial picture. So just speak to a professional, see exactly what the home buying process entails, and then that way you can kind of ease your fears, as to what you think the process is going to look like, because we can tell you. Now, the first thing you do want to do is obviously see exactly what you qualify for. The main items you're going to need are your 2 years worth of residential history. So, where did you live for the last 2 years? The underwriter, who is the person that's going to review your file and approve it, is going to look and say, okay, their job is to do risk assessment, and that's the hats like that you have to put on when you're looking to buy a house. Because a lot of times people are like, oh, I can afford this or I can afford that. When on paper, you technically might be living out of your means just a little bit. I'm not saying a lot, but you could just be living out of your means just a little bit. And understanding the dynamic of the risk assessment really helps when you're going into the loan process, so you're kind of emotionally prepared. And
Mhm.
I'll say emotionally prepared because it is an up and down emotion that you go through when you're purchasing your home. You're nervous, and then you're excited, and then you're like, oh my God, this is never going to happen. And then 2 seconds later, you're excited. So it's literally ebbs and flows that you kind of have to be prepared for. So you want to have your 2 year residential history. We do look for a 2 year work history. You don't necessarily have to be in the same employer for 2 years, but we do want to see a steady work history of some sort. Again, that's part of the risk assessment, right? The underwriter wants to know, do you have a steady job? Do you have somewhere to live? Are you a responsible person? And they're going to try to tell all of that with the information that you provide. So you want it to look as nice and pretty and presentable as possible. Um, Now, 2 years residential history, 2 year work history. Do you have a decent income? Can you afford the loan that you want to borrow? Do you have the money to pay back what you want to borrow? So that's a huge question. And a lot of times, explaining that piece is the hardest part, to a lot of buyers who have their own budget in mind. So when you go to speak to a professional, just make sure you're open minded about what the information is that you're going to receive, so you can kind of just make it fit for your situation.
Mhm.
And then, of course, you want to have your own money. You want to have some money to put down, put down on your earnest money deposit. There are grants and down payment programs that you can apply for to assist, but you still want to have your own funds, because at the end of the day, when you buy a house, it is expensive, and you're saving most of the time a good portion of your life. So a lot of that money is going to go into your house, and then you want to have some money saved for when you move in your house. There's furniture, utilities, and moving costs and things that you want to be prepared for. And just repairs. I mean, even if you get a new construction, sometimes you move into a brand newly constructed house, or a newly renovated house, there may be incidentals that you might have, small things that may break when you move in, or warranties that you may have to use. So just be mindful of that. So those are the basic things that you want to be prepared for when applying for a loan. And then just the timeline. Once you do start your application, you should be the closing within 30 days of finding your house, especially in today's market. You and I have worked together a long time, so we've seen the changes in the market. We've seen, you know, some seasons it's weeks before you can hear back, and then other seasons it's 2 days before you hear back. So just kind of check and see what the market looks like for you when you're ready to buy. That we can kind of prepare for your timeline.
Mm-hmm. And credit scores, how important is that in the process?
Oh yeah, so credit score would be one of the more important pieces too. Look, I forgot the most important part. So you do want to have your credit score intact. You want it to have in a desirable area. So for the bank, at Wells Fargo, we require a 620 credit score to begin. Some lenders can go down a little bit lower, but for us, we started at 620. So don't be discouraged if you don't have that. You can still get into a loan program depending on your scenario. 620 and above, and that will generally help with where your interest rate tier is going to start. And when I say tier, that means where your base is going to start, because there are several factors that play into your interest rate. So things like your debt to income, how much you're borrowing, what your loan to value is going to look like, things of that nature are also going to compile with your credit score to see exactly where your interest rate is going to lie.
Very good. Very good. So a lot of people, there were several things that you said. One,
Mm-hmm.
debt to income, which is how much total debt you have, that what you're paying monthly based on, I guess the amount of money that you bring home every month.
Correct.
And that's really important to you and lender because it affects your
Mm-hmm.
affordability. What you may, like you were saying, you may think you can afford to pay X, and you can't, because once you pay your mortgage, your utilities, all the other things, you don't have enough money left over to live
To
life and
live.
do
Mm-hmm.
right and do basic things. And it's not the intention for you to be house poor, but to have a beautiful life, right? And the other thing you said was about people putting it off into the future versus now. And one of the things I see
Mm-hmm.
over time, and it's hard for people to get this, real estate always appreciates.
Yeah.
No matter how much the up and down and up and down and up and down, over the long haul, the value of real estate continues to increase. And what you could afford this year is not going to be what you can afford next year.
Oh my God. I'm so glad you said that.
Not only because the prices of houses are continually doing this, it may be doing this, but
Hmm.
it's still on this upward.
Trending up.
Yeah. The other thing is the interest rate. So when interest rates were down to 3%, I was telling everybody I knew, now is the time to buy a house because
Hmm.
you can purchase more with a lower interest rate. So as the interest rate goes up, that also reduces the amount of house that you can purchase. So you have a double hit. And, I'm a
Yeah.
little bit older. So, I was in the 20% down payment market and double digit interest rates when, I bought my first home. And then over time, interest rates um, reduced. And so I think I lost Nicole for a minute, but she'll be back. Interest rates went down, and that's the time you want to refinance into um, a lower payment position. Let me see if I can get her back here. Are you there? Okay.
I'm here. Sorry. I don't know what just happened.
Oh, it took you out and put you somewhere else, and then you came back. So I'm glad you're back.
Yeah.
So I was just saying how over time the interest rate went back down, and that's the time for people to refinance, potentially lower their payment unless they're close to paying off that asset. Lower the payment because they don't want to restart the clock It just depends on what you want to do. But when the interest rate is low, is the time to either refinance or to get into the market. Just like with stocks, when stock prices are at a good place, you want to buy them then and, buy low, sell high, right?
Correct.
That's everyone wants to do. But I think the misconception is that people think, oh, I'm going to wait and I'll have more money then, but your money won't go as far as it will go today. So if you can find something, and I have a video on this, it's like knowing what your core things are that you need for that property, the location, beds, baths, space, and basic amenities, you can make it into all the other things that you want it to be over time, if that's the
Mm-hmm.
place you're going to be at, instead of trying to buy perfection now, unless you have the money to do it. If you have the money to do it, more power to you. Pay the money, have exactly what you want right now. But in this market where there's not a lot of inventory, um, sometimes you have to make concessions about what you're able to do, and waiting 2 to 3 years if what you want to buy is to buy a house and you can afford to buy right now is not in your best interest. Yeah. You'll be getting
Yeah.
less for more later. I'll just say it
Yes.
that way. You'll be getting less for more. So I appreciate you going through the process. And if we could, I want to talk a little bit about programs, because financing is the number one thing that people have fear about, having enough money. If
Mm-hmm.
they save money, like I said, I grew up in the 20% down market, where you had to save 20% of your money to purchase a property.
Mm-hmm.
Um, and now that is not the case. There are down payments that are much less than that. So talk a little bit about the basic down payments that, the FHA, the conventional, what's typically a down payment for that, and then talk about some of the programs that Wells Fargo has to assist people with down payments and or closing costs.
Yeah, sure. So
Yeah.
there's a few different loan types that we are all privy to. Everyone's heard of the FHA loan. Some people have heard of conventional but are not familiar with it. So I'm happy to go over those programs. And then obviously, especially in New Jersey, we have USDA loans, which are a thing, as well as VA loans, of course.
For veterans.
For veterans, yes.
Hmm.
So the main ones to focus on for today would be I guess, like our first time home buyer options.
Okay.
The first time home buyer option we have is, of course, an FHA loan, which everyone's familiar with. The FHA loan is a federal program that allows for first time home buyers to purchase a home with 3.5% down. It does require mortgage insurance. Mortgage insurance is an item that is added to a loan when you're putting down less than 20% on the loan. Now, the FHA wasn't created essentially for people who could not afford homes. Way back in the day, purchasing homes were very different. So before you needed to save 20%, you would go to the bank and say, I want to borrow X amount of dollars. You would get approved for your loan because you knew somebody who went to church with your cousin, whose mom's uncle knew your nephew, or something of that nature. Like, it was definitely on a barter and honor system way back in the day. Now there's so many regulations in order to prevent certain things from happening. So with that being said, these loans were put in place for people to have access, right? Before, people couldn't afford to, the general public, I'll say, couldn't afford to just buy a home. That was the American dream. Now, the conventional loans did used to require 20% down. And again, as you said, 20% down back in the day, the prices were different. You're in double digit interest rates, but the prices were, you're probably going to find a house that's closer to $100,000 back then compared to now. Just looking at the price changes from the amount of time I've been in the industry, it's a huge difference. So these first time home buyer programs really do help, as you can see, the general public to be able to have access to these homes. You know what I mean? It's about learning the information to get to it, but it's there. So now that the market has changed, we do have programs where you can put down 3.5%. Now the conventional loan programs have kind of caught up with those first time home buyer programs. And some of them have anywhere from 5 to 3% down that you can put down. So it depends on your financial situation. if you are for a true first-time home buyer or not. We'll see which program suits you best. Now, as far as our down payment programs are concerned, we do have two that we work with. One is for down payment and one is for closing cost. So the down payment program is called the the Home Buyer Access Grant.
Home buyer access.
The Home Buyer Access Grant is a down payment assistance program that Wells Fargo offers. It is strictly Wells Fargo money. There is no third-party application that you need to go through, and it's not another entity that you have to apply with. So just do an application with Wells Fargo. We see if you qualify, and that's pretty much it. Once your file goes through underwriting, then you'll get approved, and the monies are applied to your cash to close. So the Home Buyer Access Grant is a great program for low to moderate income buyers, which is a great price point as far as income is concerned. Because back in the day, you used to have to make close to nothing in order to qualify for any down payment assistance or help. But now, especially in the New Jersey market where you're at, because I'm in Dallas, our price points are a little different. But in New Jersey, the income bracket to qualify for this program is roughly in the $150,000 range, depending on what part of New Jersey you're in. So as long as you make below that threshold, then you'll qualify for this $10,000 assistance program with a conventional product.
Gotcha. What is it in Texas? What's the range?
It's about $140,000. So It's a little bit, the income is slightly different. And again, that varies, across the Metroplex.
Right. Yeah.
So it just really is specific to a zip code. So depending on your zip code and the property, that'll tell exactly what the income bracket is. But generally, if you're speaking in one area, it should be roundabouts that income. So if you make about $150,000 or less, then you should qualify for this down payment assistance program. Now, the beauty of this program is that you do not need to be a first-time home buyer to take advantage of this grant. If you own a house and you're selling a property and you want to purchase a new home, then you should be eligible still to use this product, which is phenomenal. A lot of non-first-time home buyers don't get any perks because they're like, oh, you had your one shot at it with your 3.5% down and your low interest rate. So now you're with the masses and you have to just do what everybody else does. That's not the case here. So it is really nice that non-first-time home buyers still get that help if you are selling a house and just moving into a different area or whatever your situation is. Nice. It is really nice to have that qualification there. So that's pretty much how the down payment assistance program works with Wells Fargo. Now, the program is area specific. So you do need to qualify. The second piece is either the departure residence or the subject property needs to be in an eligible area for this grant. Okay. They do work with the Hispanic and African American census tracts. So that's generally where those populations are going to be for you to qualify for that grant. Now, let's say you're in this situation where your departure residence is in an eligible area, but you don't want to stay in that area. You are welcome to take that grant and purchase wherever you want. So you could be leaving the state, you could be going to Alaska. It doesn't matter where you're going. As long as it's in the US and your departure residence is in an eligible area, you can qualify for the grant that way. Awesome. So this works lovely for sellers too. You know what I mean? Especially for listing agents. If you have any sellers that are looking to put their house up on the market, it helps if you're searching for that buyer who may not necessarily have the funds and your seller really needs that money and they can't offer concessions to a buyer. So this program is kind of a nice bridge for both parties. Now, if your departure residence is there and you're the seller, you can take that grant and buy wherever. And then whatever potential new buyer stepping into your home could qualify for that grant as well. So it works twofold, which is nice.
Nice. Very nice.
Yeah.
And then the closing cost assistance?
Yep. So the next part of that program is a $5,000 closing cost credit called the Dream Plan Home. That product is also paired with our conventional program. And this one does kind of compete with FHA rates. So this one does have a specific income bracket as well. It's a little lower than the Dream Plan Home.
Mm-hmm.
An hour for Dallas area and probably New Jersey is going to be somewhere around 90 to $100,000 worth of income. So if
Mm-hmm.
you're in that bracket, then you should be able to qualify for $15,000, which is nice if you make less than $100,000 for the year.
Nice.
So that's an additional added credit, which is nice. Again, there's nothing that you need to do in addition to it. You literally just have to qualify with your income. The area median income will tell us, depending on, like I said, your location, what that income threshold is going to be. But on average, it should be anywhere from 90 to $100,000 that any buyer should qualify for. And then, bam, you get $15,000. So
Awesome.
it is a nice program that I love being able to surprise some buyers with, because our buyer we've had, this particular buyer has been looking for quite some time, and initially they
Mm-hmm.
weren't eligible for these grants. And this map is updating constantly. So now she finally finds an offer. They finally find their dream house, and I'm able to give them $15,000, which they didn't qualify for before, which is
Right.
such a nice
Amazing.
feeling. So
Yeah. It's
it's like hitting
great.
the lottery. You get $15,000. Like, who wouldn't
It,
want that?
it is really, really great. And just so I'm clear, they're both conventional products or okay. So
Yep.
conventional
Yep.
on the down payment assistance and also conventional on the closing cost assistance portion.
Yep. Yep,
Awesome.
that's what I was going to say next. So our programs work with our conventional products. We don't have any down payment assistance programs from Wells Fargo that work with the FHA product. Now, depending on your state, then there are other products that we can pair with the FHA loans. So it just depends on your area. I know New Jersey has the NJHMFA program, which is
Yes.
really nice, and that one's on a first come first serve basis. Usually,
Yes.
when those funds are done, they're done for the year until the following year when the funding is reallocated through the
Mm-hmm.
state. So there are still programs that you can get with the FHA loan. It's just a lot of times people are told one thing and that's the box that they think they need to go in.
Mm-hmm.
So that's why I always recommend go into this with an open mind so that you can
Mm-hmm.
get the information and see what's actually more suitable for you.
Okay.
You may not need the first time home buyer option, especially if you do have the grant and then you have your own money to put down. You could put down close to 10 or 15% on the loan. And that way you're paying
Mm-hmm.
less over time for, let's say, that mortgage insurance. That's money you can save there. So
Right.
there's a few different options, especially when looking at the FHA. Yes, they do have better rates. However, you do want to take a look and see what those perks and what completely compiles that loan so that you are not overspending over time.
Right. Right. This is really, really great. And I'm sure to people who are listening, very, very exciting because some people think that, the funds are gone, that money is not available anymore to assist.
Hmm.
So this proves that is not the case. So that's great. And then too, that it's an affordable product if you meet all of the guidelines and qualifications to assist in stepping into that to the to your new property. So I'm
Hmm.
really, really excited for our client. Um, also
Yeah.
excited that this is available for other people who want to take advantage of it as well. And Nicole is always phenomenal. And when I say phenomenal, she goes above and beyond. Even if you know it's not a product that she can do, she'll refer you to something that may work for you. So she's always
Hmm.
looking in the best interest of the client, and that's in alignment with how I work as well. So I just really appreciate her for coming to share this information with you today. If you have any questions, if you are interested in the program, if you're thinking about getting pre-qualified for a mortgage, reach out to Ms. Archibald. She is phenomenal. She will get back to you immediately. She'll assess your situation and she will um, point you in the right direction to your home ownership path. So I want to
Yeah.
thank you. Thank you, Nicole. Anything else that you want to share that Wells Fargo has going on or that you just want to share in general?
Oh, yeah. I mean, we have tons of options, especially if you're considering moving to Wells Fargo or bringing any of your assets to the bank. We
Okay.
do offer relationship discounts as well. So the banks are trying to adopt a different model that I'm hearing word on the street. So if you have a credit union, for example, I know credit unions offer way different options to their existing members than the general public, right? So
Mm-hmm.
Wells Fargo has definitely stepped up their game as far as developing new products with our new leadership and trying to make things that are more affordable, more accessible, and more available to everyone, not just people who are affluent. Because usually with the bigger banks, more affluent clients keep their funding there just because it's just more sensible for them.
Mm-hmm.
Now, being the average Joe like myself, I'm making a certain income limit. So I don't have a ton of assets like, let's say, somebody who owns $1 million home would, which is completely fine. So Wells Fargo has adopted a model where if you have assets with the bank, we will consider those when offering your interest rates and things like that, depending on what your tier looks like. So starting if you have up to $20,000 in the bank and above,
Mm-hmm.
then you'll start to see closing cost credits and or interest rate discounts. So I'm happy to go over all of those details with you. It's very, very simple. It's a pretty simple process. There's nothing you need to do. But just more information that's fun for people to kind of be aware of. We want to try to keep things in house and try to keep things as best as possible. If you're not sure about what you want to do as far as your financial planning, you don't need a financial advisor that requires you to have $100,000 to manage your money in order to see where you can start saving. You can simply go to a bank, you can sit with a banker, they can give you some savings options. A lot of times I've seen customers that start with a regular savings, and by the end of it, they have $100,000 in a CD because they've taken time to save and go through those steps and maximize on higher interest rates and put their money where it makes sense for them. So don't be afraid to explore those options. If you don't make a lot of money, the average person that may make $50,000 to $100,000, that's totally fine. You do have something that you can save that you put away, and then our professionals can help you do that.
I appreciate you saying that because I was having a conversation. Well, two things. I did a video on high yield savings accounts for
Mm-hmm.
people because sometimes, like you said, we're not taking advantage of all the things that are available to grow our money.
Yes.
And two, I had a conversation with actually my credit union because I have money in different accounts, which is something
Mm-hmm.
that I also recommend for people to have money in different banks just in case
Yes.
things happen, life happens. But I was having a conversation with the credit union, and it's probably the first conversation I've had with them about the interest rate. And I thought the interest rate on this one particular credit card was one thing, and she's like, "No, your interest rate is X." And I was like, "When did it get lowered?" I know they kept raising how much I could borrow, right? And I was like, and my interest rate went down too. I didn't realize that. So
Yeah.
having those conversations, plus they, like you were saying, shared other things that I could, other ways that banks are enticing you to save money. Put your money here. Different ways that you can help it grow over time. So I appreciate you saying that as an opportunity with people moving into Wells Fargo, that there are benefits if you're going to purchase a home. And also just sitting down, no matter who you bank with, sitting down with your the banker and just asking them what's available to you to grow your money, to have that.
Yeah, and they'll all help you. I mean, we've all been
Mm-hmm.
there, right? We're financial advisors. We've been in we live life too. So there's so many situations we've all been in where we were less than desirable with our savings account or had to dig ourselves out of a hole and pull up our bootstraps and go. So those are the people that you want to speak to kind of help guide you to where you want to be. And it's also one thing I do want to say is just a piece of encouragement, right? Like you don't want to be a first time home buyer. I understand 1,000% how overwhelming buying a house can be, how intimidating it can be. Because, like I said in the beginning, I was never raised to buy a house. So the thought of me owning one was not even in my mind. So now that I own a house and that I'm a landlord, I wish that I knew those things a little sooner because I probably would have maximized a little bit differently. So I will say this, just don't be discouraged. See for yourself what works for you. Don't listen to anybody who's not bought a house or someone who had a bad experience. That is completely fine. There's plenty of people who have bad experiences in restaurants and bars, and we still go there and we're fine. So find the right person that works for you, and stick with that person who can guide you, and just don't be discouraged. Just see the information and see where you can jump in the race. I kind of call it like, that everyone's seen Finding Nemo, or most people have seen Finding Nemo, and when they're kind of looking to get to Nemo, they jump in with the sea turtles. And I just find that real estate's kind of like that. You just have to jump in, ride until you can, and then jump out when it's not for you anymore. So it's not something that you're married to for the rest of your life. You can always sell, buy, exchange, rent, change your situation if you need to, but definitely just get the information and get the education, especially people who have not come from that walk of life. So that's what I recommend.
Indeed. I always still think it's a great investment, and if you can buy it cash out, great.
Yeah.
If not, leverage your money and get financing. Do that. You can do that. So there's so many ways to finance a real estate transaction. But I agree. Get in where you fit in, and get
Pretty
in.
much, yeah.
Get in as soon as you are able financially. Yeah.
Because you have some buyers that they're afraid and they do an application. And by the way, our applications don't require a hard credit inquiry. So if you really just want to know and just be presented with what a mortgage would look like, we're happy to provide that for you with no pressure. But it is true. Just get in where you fit in, because you just never know. I've had so many buyers I've spoken to that came to me and just like, I just want to know the information because they're just afraid. And once I speak to them, I'm like, you can actually buy. You don't have to wait till next year. You can get a house whenever you're ready, like as soon as you find one. And like just them hearing that, sometimes digesting it, they're not ready. And you can see the processing that they're going through. Like, man, I could really be a homeowner, which is also nice. But don't be afraid, because you just never know. It may be your time and you just don't realize it.
That part. And you said something really, really valuable. Another fear is people don't want their credit pulled because they think it's going to drop their credit score. So the fact that you're saying they can do an inquiry, just kind of get an overall view of, are they able or not able
to buy
without, the impact, the hard impact.
Like, do you qualify? Yeah, they just want to know, do you qualify? And we can tell you that. Yep. And don't be married to your credit score, by the way. I love that people are trying so hard to get their scores where they should be, which is great. But unless you're planning to buy something, your score is like, like, when do you really need it? But it is going to fluctuate. So it's not going to be the same. It's going to be different when you go to different places to check it. So don't have a heart attack or panic attack if it's not the same across the board. That's normal. And then when you do open up new lines of credit, your credit will be impacted. So it is going to go down for a little bit and then it'll come up. So it's an up and down, a give and take. So it's not a set in stone situation when you're buying a house, unfortunately. I wish it was.
Indeed. Well, this has been really, really great and really, really wonderful. So if people want to reach you, how do they come?
If people want to reach me, I'm going to tell you. No, I'm just joking. My phone number is 609-203-3020. You can call me or text me anytime. I'm happy to discuss any questions that anybody might have, or if you're inquiring for somebody else and just want some general information, I'm happy to point you in the right direction.
Awesome. Thank you so much, Nicole. I really, really appreciate you.
You're welcome. Thank you for having me.
Indeed. And I just want to thank everyone who tuned in today to get this information. Definitely please share it with other people who you think would find value in this conversation today, because everybody needs money. We're always about show me the money. So really, really excited to know that down payment assistance and closing cost money is still available. And so definitely reach out to Nicole. Financial Fridays, we stream live here on every Friday, 9:30 a.m. Eastern Standard Time on YouTube and Facebook, but you can catch the replay on Facebook anytime. So definitely share it from there. And also at Lyonsview Realty, we provide ESP. That is expertise, solutions, and patience before, during, and after the sale. We assist sellers, buyers, and investors build wealth in real estate, and real estate professionals build careers in real estate. So, really excited about that. People say, Clara, what is a Lyonsview lifestyle? Because that's what I want everybody to be about. And a Lyonsview lifestyle is when you actualize your dreams into reality. You can buy that house. When you see the possibility of what's available, when your life is in order, your finances, your health, your spiritual mindset, when all of those things are in order, then you have a Lyonsview lifestyle. I invite you back next Friday. My name is Clara Lyons-DeVaughn, and until then, keep living your best, your very best life. Thank you so much, Nicole. Love you.
Thank you. I appreciate it.